File in this May 10, 2018, file photo. Stock screens are shown at the New York Stock Exchange. The U.S. stock market opens at 9:30 a.m. EDT on Thursday, July 19. AP photo. Mark Lenihan. File. Singapore. AP. Asian markets wobbled Friday on signs that China and the U.S. were preparing to impose more tariffs on each other's products. Keeping score, Japan's Nikkei 225 lost 0.5% to 22,652.42 and South Korea's Kospi dropped less than 0.1% to 2,281.69. Hong Kong's Hang Seng slipped 0.6% to 27,858.02. The Shanghai Composite Index edged 0.1% lower to 2,769.06. Australia's S. Wall Street, U.S. indexes finished mostly lower. The Nasdaq Composite dipped 0.4% to close at 7,825.30. The Russell 2000 index of smaller company stocks gained 0.6% to 1,701.31. Smaller companies tend to do better than larger ones when trade tensions flare up because they do a greater proportion of their sales in the U.S. Yuan declines. The People's Bank of China set the Chinese currency's central parity rate to 0.9% weaker against the dollar on Friday. This sent ripples through Asian markets. If the yuan continues to depreciate, goods exported to China will become more expensive to consumers there. Chinese exports would also be relatively cheaper, possibly balancing out suggested increases in tariffs by the Trump administration. Analysts take. One theory is that the PBOC is depreciating the yuan because it has not enough ammunition to fight a dollar-for-dollar increase in tariffs. The markets are very risk-off. There is a loss in confidence right now, said Francis Tan, an economist at UOB Bank. Auto tariffs rejected. The U.S. Commerce Department sought feedback on President Donald Trump's plans to consider taxing auto imports on Thursday. Critics lined up to urge the administration to reject auto tariffs. They argued that the taxes would raise car prices, squeeze automakers by increasing the cost of imported components and invite retaliation from U.S. trading partners and allies, like the European Union and Canada. The Alliance of Auto Manufacturers rejected the levies on car, truck and auto parts imports, saying the view was shared by over 2,200 comments it had received. Week ahead, investors are keeping an eye on the European Central Bank policy meeting and data on how the U.S. economy performed in the second quarter. They will also be looking out for more U.S. corporate earnings, such as those from tech giants like Google, Amazon and Facebook. Interest rates. In an interview with CNBC on Thursday, President Trump said that he was not happy about Federal Reserve's recent interest rate increases. The Fed has raised its benchmark rate for a second time this year and projected 2 more increases in 2018. Its rate hikes are meant to prevent the economy from overheating and igniting high inflation. But rate increases also make borrowing costlier for households and companies and can weaken the pace of growth. The president acknowledged that his comments about the Fed would likely raise concerns, as the central bank has long been operating free of political pressure. Currencies. Trump's comments caused the greenback to decline slightly. The U.S. dollar extended its losses on Friday, easing to 112 yen and 35 cents from 112 yen and 46 cents. The euro rose to $1.1655 from $1.1644. Oil. Benchmark U.S. crude dropped 12 cents to $68.12 per barrel in electronic trading on the New York Mercantile Exchange. On Thursday, the contract settled at $68.24 a barrel. Brent crude, used to price international oils, remained flat at $72.58. Copyright 2018 The Associated Press. All rights reserved. This material may not be published, broadcast, written or redistributed.